Hey guys, Joseph Arendsen here, making probably one of my favorite videos, and that's really analyzing Q1 and then making some predictions for Q2. Here we go. All right guys, so when we look at the first 3 months of this year, we had a similar theme. Sure enough, low inventory, lots of buyer demand, honestly, not enough property out there to fill what our buyers are looking for. And that's been the common theme throughout this first 3 months. However, we are starting to see a little bit more inventory. Now, with that, we've actually seen interest rates come up. So that's been what we're fighting against, and that's what we're trying to understand of how that's going to affect our market going into Q2. So this first 3 months of the first quarter, we've seen really low inventory, higher interest rates actually getting up to close to 5%. However, with that low inventory, even with these higher interest rates, we've seen appreciation still grow. When I just analyze San Diego coastal, we're already up around 4% for this year. Could that continue? I really don't think so, but it's definitely a good start for you homeowners out there. All right guys, so here's my prediction for Q2 of 2022. First and foremost, the buyer activity has to slow down a little bit. We've had a year plus of really high buyer demand, and that was probably driven by a few different factors, but the big one being interest rates. Now that interest rates are up closer to 5%, or back to maybe 2008 standards or 2008 situation, or sorry, 2018 situation, I think that's gonna slow down some of the buyer activity out there. So what we can predict, or what we expect, is still to have this low inventory level, but less bidding wars. So hopefully we don't have 10 buyers going for a property, we have 2 or 3. So a little bit less competition. So I know I sound like a broken record when I keep talking about inventory. However, if we look back at the last 3 years, outside of COVID, it was a little bit delayed because of that. But if we look back at the track record that we've seen over the last couple of years, sure enough, from about April to July is the peak time that we're gonna get inventory on the market. So I do expect more inventory to come. However, it's not going to flood the market. We just have too many people sitting in homes with really good interest rates with a lot of equity that don't really want to make a move or have nowhere else to go. So we'll probably see inventory levels relatively stay low, but at least we'll have more inventory from about this point on all the way up until July. So my last prediction for Q2, I actually have been watching a lot of the second home markets pretty closely, and we started to see a slowdown in them. So I do predict going through Q2, we're gonna see a little bit of a slowdown in that secondary market, mainly because vacation homeowners probably aren't going to be out there purchasing when you have rapid inflation happening, which we're seeing, cost of goods going up. Are we necessarily going to see these families go and buy a second home when they're also having to pay more for, everyday expenses? Probably not. So outside of your normal market like us here in San Diego, we're still going to see a lot of demand. We might see a little bit of slowdown in the second home market. All right guys, so you know how I like to end these videos, and that's with my seller and buyer advice. For all my seller clients out there, first and foremost, don't be greedy right now. We've seen it over and over again this first quarter where we have homeowners, maybe asking too much or have unrealistic expectations on what they can get for their house, and sure enough, it doesn't happen. One of the biggest examples of this is not one of our seller clients. It was actually a buyer that we were putting in an offer for, going in at full price, and sure enough, the seller countered with $100,000 more than what they were asking for. Now, there were no other offers on the table, and that home still sits on the market today, but that's somebody just, probably being a little too greedy and missing out on an opportunity to sell for a remarkable price. So number one, don't be too greedy right now. It's a great time to sell, low inventory, lots of demand, and high value. So if you're thinking about selling, let's get it priced right. The next thing for sellers out there, get your property looking good. Buyers are not looking for remodeled projects right now. With higher interest rates, they're putting down more money. They don't want to do full-on remodels. So if you can fix your place up and get it move-in ready, it's a great opportunity or a great way to put your property on the market and get top dollar for it. All right, for all my buyers out there, number one tip, don't be scared of these higher interest rates. They're 4.5% to 5% is actually a relatively good rate when you look at historic data. The biggest thing is find a payment that makes sense. Reverse engineer this. Tell your mortgage lender how much you want to spend on a monthly basis, and then we'll figure out how much you can actually go spend. Once we know how much you guys can go spend, then let us, the real estate team, go out there and actually find you a property within that budget. So that's my advice for you guys. Please reach out to me or anybody here on the True Local team if you have any questions.